So our thesis was basically this, that the previous year and the year before that, the credit costs that some of these banks have taken are significantly higher, 2.5% almost. And a large part of the NPA recognition, which was one of our primary concern, that most of these banks were not really recognizing, and thanks to RBI, we think 90% of the recognition is very much there. The admission of the problem is there. It's easier for investors like us to make an analysis and take a longer term position on this. So we know that near term noise will be very high. Plus the fact that the entire IBC and NCLT process, in our view, is a good step forward. Maybe it hasn't exactly worked based on the timelines, because we were expecting that these timelines will be held. But thanks to the courts, they haven't happened. But still, even if I assume that there's a delay of 6 months, 8 months, we do think that there'll be significant reduction in the credit cost. So we think that some of these larger banks could have credit costs not more than 1.5% for the current year, and even much lesser the next year. So when you extrapolate those numbers and put it on a sheet, you get numbers which are significantly higher than what the market's expecting. And typically that's where the delta is, that when you get something where the market's not expecting, that's where you get some sort of a re-rating. Honestly, these are not secular trades for us, but these are tactical trades where we think that over the next 18 months, there is a possibility that you could make money some out of these trades. But you need patience and stomach to bear the volatility.
I thought you were going to start by saying I told you so, because this is what you've been telling us for the last 6 months.
Yeah, but
right?
it hasn't worked, so I don't have any issues. I mean, nobody can be 100% right.
Absolutely.
And the markets have their own moods. And
you've got to be patient, as you said.
Yes.
But what about, the commentary that Bank of Baroda gave us just a while back, where they said that this loan growth of 20% is something that can hold. The slippages, may reduce going ahead. You think the time has come to maybe just as a tactical trade, put some money into some of these PSU banks, SBI, Bank of Baroda, etc.?
So we have like the PSUs also in the corporate bank, at least the larger ones. And actually some of them had double-digit loan growth even last year, but we haven't really noticed and we haven't gone with the details. So I think if you're selective in the PSUs, and I'm not taking all the PSUs as a basket case here, there is an opportunity for money to be made because the valuations are much lower than even their long-term averages. So there is a trade for corporate banks in general, because we also think that on the ground there is a turn that is happening. Across the board, when we are speaking to companies, in general, the demand outlook has been much stronger. For whatever reason, it has been much stronger, and we are seeing that with the results, we are also seeing with the commentary. So when you get that sort of environment, it is great for corporate banks to flourish when economy is doing well on the ground.
Okay. Well, let me come to this rally to 11,300 that appears to have come from nowhere.
Right.
Markets were sulking just 3 months back. In March, they were sulking.
Yeah.
How do you rate this rally? Do you think it has legs, or is this a burst of enthusiasm that won't last?
So I think if this rally now becomes a bit more broad-based, then it will have more legs. And if you were to ask me to make a calculated guess on this, I think the probability of that is high, only because what I'm seeing on the ground. So because across the board, I'm seeing companies reporting good numbers, companies giving very positive commentary. The body language when I meet them is much stronger now than it was, say, 6 months back. So obviously something has changed on the ground, and we can discuss that. I have some theories on that. So based on that, I would gauge that we have more legs for the market, because 10 stocks alone cannot take this market up too long. So
then
we would need...
discuss exactly that. Where are you seeing growth outside these 10 stocks in the conversations with CEOs?
Yeah, so I think one of our theories is that we've had a fiscal stimulus which has gone unnoticed, which is basically, if you look at the GST cuts that we've had for the last 3 times, so only the GST cuts and the other fiscal stimulus has come in the way of the loan waivers. If you were to add just the loan waivers and the fiscal stimulus, they are in excess of 1 lakh crores annualized, which is not a small number. Add with this, I think we also were surprised to see that the entire telecom market has shrunk from about 2,25,000 to say 1,50,000 crores. So that basically also is a stimulus, because consumer today is actually paying less, getting more, Where has that 75,000 crore gone? It is also a sort of a stimulus. So we're just adding all this. Why is it that suddenly, you know, companies like Unilever giving 12% volume growth? Why is it that, you know, two-wheelers, commercial vehicle, I mean, cranes are sold out, it seems. The construction equipment companies are fully up. So obviously something is happening. So we think that if you add up all these numbers, I mean, you have to, it's a jigsaw puzzle. You add all of these numbers are not small. We are talking of maybe 1,50,000 crores of fiscal stimulus, basically more money in the hands of people.
Yeah.
So where has it gone? So it's going into consumption possibly. Once that goes into consumption, it has a spiraling effect where, you know, your demand is better, so you're setting up capacity.
So are you trying to say that the lesser money we spend on telecom, the remainder money is going into the consumption space? So maybe some of these consumption stocks could do better despite the steep valuations of the HULs, ITCs of the world?
Yeah, so maybe not for you and me, but for somebody who is at a bare subsistence level, for him telecom is an essential spend, right? He would have spent definitely on that irrespective of what happens. Suddenly, if he has, say, 50 rupees more, I mean, actually the numbers are that small. That goes into spending, so we don't know where. So if you look at some of the fast food item companies, why are they suddenly showing 20% same-store sale growth? I mean, these are baffling numbers. I mean, I have not seen numbers like this at a time when you are generally saying that economy is not doing well. So surely there is something in this jigsaw puzzle.
Sonia's question is, we buy the argument that there will be higher volume growth and higher same-store sales growth, but the prices are they already reflecting that? Will you still buy consumer companies?
So there are many companies in this carnage where stocks, so we just look at those 10, 15 stocks or maybe 30 stocks in total, but there are consumer or consumer-related companies which are at one-time sales now. There are many companies which have really fallen off the cliff for good, bad or ugly reasons. But some of the good companies, maybe it's time to relook at them because the earnings are really coming back. So my point is that generally the commentary from on the ground that I am getting based on meeting companies, the commentary I'm getting after the results is quite positive. Whereas 6 months back, I wasn't getting this. That's the difference I'm saying.
Okay, you also spoke about telecom briefly, that, you know, the costs have gone down quite a bit. This is courtesy now, you know, the largest player, LGO.
Yeah.
But do you see more stimulus for a stock like, say, Reliance Industries? Not getting into specifics, but how do you see that entire competitive scenario play out? Because what we saw with LGO is that despite so much competition, the ARPUs have not fallen as much as one would have expected.
Yeah, so in general, my thesis has been that when you have a price war, you're better off being a consumer than a minority shareholder.
Yes.
That's my general thesis, and I have stayed to that starting from Hindustan Unilever PNG war to now. Maybe Reliance is the exception where it has actually done well. Whereas the other competitors haven't done well. But I would stay to my thesis that I'm better off being a RGO customer right now.
So you're better off being a Bajaj Auto customer than being a Bajaj Auto shareholder?
Because there seems to be a price war there.
Yeah, at this stage, though I am a bike rider, I have not been a fan of Bajaj Auto's bikes. So I don't see any reason to change. But if somebody is looking to buy a new bike, maybe this is time to consider that, because the offers that they're making is unbelievable. I mean, free warranties for 5 years, insurance.
So what about bike stocks then?
So it's same rule that
don't get into.
It's a difficult time for bike stocks, but it's an interesting space to watch because at some point this war will end, and you may want to just get in slightly before the war ends, not after the war ends. So it's an interesting space.